My name is Big Mike Zlotnik, and welcome to Tempo Family. We're all about helping you find great, predictable, reliable, conservative investments in commercial real estate. If this sounds like the kind of a journey you'd like to take, join our community by subscribing. Let's do this together. Hi, everyone, and welcome to Tempo Investments Market Insights. Today, I would like to talk about a segment of real estate market that's getting renewed attention. One that's uniquely positioned at the intersection of stability, income, and opportunity. That's the Industrial Sale Leaseback. And right now, we believe this strategy offers some of the most compelling risk-adjusted returns available in the real estate landscape. A sale leaseback is a transaction where the company frees up the capital tied up in the property but keeps the operational company and control. For the investor, it's a chance to acquire a high-quality, income-producing property with a strong tenant in place, typically under a triple net lease, where the tenant covers all cost increases, taxes, insurance, and maintenance. In essence, it's a partnership. The company gains liquidity to grow, pay down debt, or fund expansion, and the investor gains a reliable long-term cash flowing real estate asset. Now, why are we focusing on the industrial properties? Simply put, industrial real estate continues to be one of the strongest performing asset classes in the commercial real estate, even through market headwinds. In 2025, we're seeing a slight cooling in the demand compared to the pandemic era highs. But it's not a weakness, it's normalization. Vacancy rates have ticked up modestly as new supply hits the market. Yet, the underlying demand for logistics, manufacturing, and distribution space remains robust. E-commerce, supply chain, reshoring, cold storage needs, these are long-term secular drivers. At the same time, higher interest rates have pushed cap rates higher. That's created a window of opportunity for investors to acquire quality industrial assets at more attractive yields than what we've seen when the interest rates were lower. So for those looking to enter or extend their industrial exposure, the time right now is unusually favorable. From the company's perspective, Sale Leaseback is a strategic way to strengthen the balance sheet. Think about a manufacturer or logistics firm that owns its warehouse or a production facility. That real estate might represent millions of dollars of locked up capital, money that could instead be deployed into inventory, R&D, new equipment, or paying down higher cost debt. By selling the asset and leasing it back, they convert that equity into cash while maintaining uninterrupted operations. We are seeing that trend pick up across the country as companies look for capital efficiency, particularly middle market firms. They want to grow but face tighter credit conditions. We're seeing this trend pick up across the country as companies look for capital efficiency, particularly mid-market firms that want to grow but face tighter credit conditions. Private equity sponsors have also been active in structuring sale leasebacks for their portfolio companies, using them as a tool to reduce leverage and fund expansion without diluting ownership. For investors, whether institutional, private, or high net worth individuals, the appeal is clear. Industrial sale leaseback typically offer 1. Predictable long-term cash flows with signed long-term leases 10 to 20 years or even longer in duration. 2. Triple net structures or absolute triple net structures where the tenant covers all expense increases, such as insurance, taxes, maintenance, and similar. 3. Inflation protection through built-in rent escalation clauses tied to CPI or fixed annual increases, typically in a 2 to 3% annual range. Credit exposure, not to the general market, but to a single operating business with a vested interest in staying put. That last point is the key in a sale leaseback. The tenant's business literally depends on the property. They're not likely to walk away. When you combine that operational commitment with the structural strength of industrial real estate, you get a defensive investments with steady income and low correlation to more volatile assets. Of course, not every sale leaseback is created equal. At Tempo, we focus on several underlying principles. We look for tenants with strong financials and established operating histories, businesses that are integral to their supply chain or manufacturing footprint. We target lease terms of at least 10 years, but many deals are 20 to 25-year leases, ideally with extension options and clear rent escalation clauses. We prioritize on modern, functional industrial facilities in logistics-centric locations near major highways, ports, or population hubs where replacement costs are high and vacancy risk is low. We ensure pricing discipline. In today's environment, cap rates have moved up enough to create real entry yield. We are no longer competing in the compressed pricing environment of 21 and 22, which gives investors a margin of safety by investing in 25 and into 26 when the interest rates are expected to come down, but the current cap rates are still high. So it's a tailwind expected environment in the upcoming years, but the deals today are very attractive. So where are we in this cycle? We are in a market that's repriced risk. Rates are higher, yields are better, and the competition is more rational. That's a recipe for disciplined investors to acquire high-quality income-producing assets while others are still on the sidelines. And because industrial demand fundamentals remain intact, we believe this is a strategic time to deploy capital into well-underwritten industrial sale leaseback properties before the next compression cycle begins. At Tempo Investments, our focus is on identifying and structuring these kinds of opportunities, assets with strong tenants, healthy cash flows, and durable long-term value. If you're an accredited investor or an advisor looking to diversify into a sector that offers stability, income, and intelligent exposure to U.S. industry, we would love to connect. Reach out to our capital markets team, and let's explore how industrial sale leasebacks can fit into your investment strategy. Thanks for joining us. Until the next conversation.